And for more on the markets, let's bring in Megan Horneman, who's the director of portfolio strategy at Verdence Capital Advisors. Megan, really great to have you on this Monday morning. Futures, as
Morning.
Krista was mentioning, rising on optimism surrounding that May jobs report. I know the report came out Friday, but still those numbers really shocking. Wondering what you make of it. 2.5 million jobs created. Expectations were that 8 million would be lost.
I think this is that first initial shocking economic report that some of us had expected to happen, whether it be from a manufacturing standpoint or from the employment side. Remember that coming into this pandemic, we were in uncharted territory. It was very difficult, if not impossible, for economists to really figure out what the depths of the economic decline would be across a lot of the different economic data. So we got that shock and awe number. I think going forward, though, we're going to have to continue to see some better economic data. We don't expect to see some of these shock and awe numbers again, but you will have to see more consistent, solid economic data to prove that we're really out of the woods here. One of the things that we think is also driving the market higher is the fact that coming into the pandemic, no one really could gauge what the human element was going to be with this when we did start to reopen the economy. So some of the things that we're looking at, just underlying forward-looking indicators on the consumer, are things like, how much are they moving out and about? Are they getting back out? Are they stuck in this, stay-at-home mentality? So you can look at things like air travel, or the MTA turnstiles that you're starting to see in New York that are actually back up to the levels we haven't seen since March. Open table, people going back to restaurants, and then some of those weekly consumer comfort indices that we're looking at. And the one that Bloomberg watches actually has been up for 2 consecutive weeks.
So I know that it's a hard thing we're in these unprecedented times, but just in terms of understanding the predictions, any insight into why there was such a disparity between the actual numbers and what the estimates were? And we saw it for ADP for that report on Wednesday, and also the jobs report Friday.
Yeah, I think it's a very complex number, I think, from the state, local level as well, and gauging this. But I also just think that the economy did get back into opening, I think, quicker than some had anticipated. So a lot of those employees that were furloughed or laid off entered back in mid-May. By Labor Day, about 90% of the U.S. was out from underneath of such the strict guidelines. And I think that might have been just a little bit sooner than some had anticipated.
Last week, President Trump signed a bill that allows small businesses who received loans during the COVID-19 outbreak a little bit more flexibility. What kind of impact do you think that that's going to have?
I think any help that we can give to the small business community is definitely important, because let's remember, small businesses are at the heart of the U.S. economy. They make up a significant amount of the jobs, the non-farm payroll jobs in this economy, and they're struggling. There are a lot of small businesses that still are not allowed to open, or are open with severe restrictions. So this part of our economy definitely needs as much help and that we can get, and as quickly as we can get to them.
Onto some tech news, because the tech sector has really, at least before last week, been what had been propelling the markets. Some states' attorneys general are investigating Google for potential antitrust violations. Is this concerning for people who invest in tech, or is this just more of what we've been hearing for months now?
I think that from the tech side of it and the political side of it, with that, they're going to always have that risk to them. One of the things I think that's really just kind of impacting tech lately, remember, it's still participating in the rally, it's not leading the rally like what had happened for so long and so many people had been accustomed to. They're still good, solid names. You still should take a look at them, especially if valuations make it attractive for an entry point into some of those names, but also be cautious that they have made up the majority of this rally. And what's more, gives us more optimism is that you're starting to see more breadth in the rally. So even though those tech names are still participating, you're finally getting some of those names and those sectors that did not participate in the rally early on that are really starting to come out of the gates, and that's optimistic going forward.
Also, there was a report over the weekend that Gilead was approached by AstraZeneca to merge. Um, do you think that that might actually happen? According to the reporting, Gilead is not interested. But how much would this deal have changed the drug industry? And is this just kind of what we're going to see for this industry going forward?
I think merging is something you're going to see in a lot of different industries, especially healthcare, because they are right now at the forefront of the race for a vaccine. So I think you'll see that in healthcare. You may see that in some other sectors as well. With remember cheap money and mergers, acquisitions. This does tend to occur during that time. But I think it's way too early on to speculate on what that may happen with those two individual companies.
All right, Megan Horneman, Director of Portfolio Strategy at Verdence Capital Advisors. Really great to have you on this Monday. Thank you.